expert group on mortgage arrears, of which I'm a member, published its interim recommendations at the start of the summer and is due to issue further final recommendations in November. The most recent data shows a continuing rise in the number of borrowers who are in arrears for 90 days or more, with more than 36,000 cases of arrears equaling 4.6% of all accounts. This is a source of concern, and it's clear that these numbers will continue to get worse before they get better, because it will take time before economic recovery translates into higher levels of employment and therefore better ability to pay off mortgage debt. On the positive side, the data shows that repossession levels are still extremely low. For example, there were 11 repossessions per 100,000 mortgages in the second quarter of the year here, compared with 82 repossessions per 100,000 mortgages in the UK over the same period. That shows that a lot of lenders are working with borrowers to reschedule mortgages to avoid repossession. Last month, we published the finding of a recent series of inspections across 5 mortgage lenders, which found good levels of compliance with the specific provisions examined in our current statutory code. Our inspections confirmed that the mortgage lenders inspected complied with the moratorium on legal action as required by our code. It was also evident that the mortgage lenders inspected were willing to work with consumers to assist them in addressing their mortgage arrears problem. Lenders were found to be willing to enter into alternative mortgage repayment arrangements with consumers over various time periods. But we know that the data provided by the central bank does not tell the full story, and that it doesn't capture the large number of borrowers who have already rescheduled their loans. One of the interim recommendations of the expert group is that we should require reporting of the number of rescheduled loans as well as those in arrears. That's something we will do. In June, the expert group, in fact, made 41 recommendations. All lenders will be required to implement a mortgage arrears resolution process to ensure better communication with customers, standardized documentation, impose an obligation to assess which customers are at risk of arrears, and to ensure more consistency and transparency in their approach in arrears cases. At the central bank, we've swiftly published a consultation paper to implement these changes through the statutory mortgage arrears code. As a result, the code proposes that legal action will not be possible against borrowers who have reached a forbearance or rescheduling agreement with their lender. Also in these circumstances, customers cannot be required to change from an existing tracker mortgage to another type of mortgage. This consultation paper and the responses can be viewed on our website. The interim recommendation also delivered relief to borrowers in arrears by recommending that arrears charges and penalty interest be banned. At the central bank, we're currently engaging with the various lenders regarding the process of removing these charges. These reforms will help improve the position of borrowers in arrears and make it easier for them to reach agreement on a forbearance or rescheduling plan to keep them in their home. This has been a key focus of the work of the group, to create a framework that keeps as many people in their home as possible, even if they're in arrears. In many, if in not most cases, the best solution will be some form of loan rescheduling or forbearance. Can more be done beyond rescheduling and forbearance? On the expert group, we've considered this issue very carefully and have closely examined the schemes in place overseas designed to assist borrowers. This is a hugely difficult subject. It's right to feel compassion for the homeowners who are stuck in arrears, and understandable that some wish to go beyond rescheduling of debt to consider some sort of debt forgiveness. However, on the other hand, the cost of any support will need to be borne by the taxpayer or by the banks themselves, and therefore, in many cases, effectively the taxpayer as well. This raises question of fairness for taxpayers who are not in debt, and a time of immense budgetary pressure, affordability for government finances. There is also the risk that any scheme would create perverse incentives and in fact make the arrears problem worse by encouraging some borrowers to stop making payments. Our survey of international schemes by the expert group has found, in fact, that no jurisdiction simply provides for debt forgiveness for customers in arrears. In the United States, there are schemes which provide reductions in interest payments or, exceptionally, principal that is owed. However, it should be noted that the entry criteria are strict. The government provides very large subsidies to the banks to take part, and any debt forgiveness is in fact still at the discretion of the lender. Crucially, the US mortgage market is also fundamentally different in structure to that in Ireland, as lending is on a non-recourse basis. Here in Ireland, like in the United Kingdom, mortgage lending is on a recourse basis, which means the borrower is personally responsible for the full debt regardless of the value of the property upon sale. In the UK, there is a scheme comparable to what's already in place in Ireland through the Mortgage Interest Supplement. And there are other initiatives providing more long-term housing support as distinct from debt forgiveness schemes. There is also provision for debt for equity schemes, although take-up is very limited, and it's hard to see how this would be effective in a market with widespread negative equity. But there is no debt forgiveness scheme in the context of mortgage arrears. Another of our conclusions is that some mortgages are simply unsustainable for some borrowers. The amount of debt is simply too great to make it realistic to work through the problem for some borrowers, even with forbearance and rescheduling improved. We heard this not just from financial institutions who gave evidence to us, but from consumer groups and government agencies. The difficult message from everyone was that in some cases it's better to look at the alternatives such as selling the house, voluntary surrender, or accessing social housing. There are two important conclusions that flow from this. First, this may result in an increased demand for social housing support at a time when housing need is already high and rising and the level of resources available is under greater pressure than ever. Second, where voluntary surrender does occur, borrowers are likely to face a shortfall as a result of the sale of the house and therefore a continuing debt. The issue of a debt burden arising from a mortgage shortfall situation is being considered by the group. Being weighed down by such a debt for more than a decade and bogged down in legal proceedings makes no sense. I believe that reform of our bankruptcy laws and procedures is necessary, overdue, and now urgent. In its revised programme for government in October 2009, the government said this reform is a priority. The imminent final report of the Law Reform Commission on personal debt management and debt enforcement is expected to lay the foundations for the redesign of the personal insolvency process, including the development of a non-judicial debt settlement system. Reform of the current bankruptcy regime could, for example, allow borrowers to earn a fresh start by discharging their debt over a reasonable period of time. I regret to say there is no easy solution to the difficulties faced by families and others who are in arrears with their mortgages. But against the background of a difficult economic and budgetary environment, the reforms that are being developed by the expert group will help to deliver a better process of resolving arrears, provide immediate relief from penalty charges, pragmatic arrangements to help borrowers stay in their home, and appropriate assistance to those borrowers who have unsustainable mortgages. My message to borrowers who are in arrears, or who think they're in arrears, is to contact their bank as soon as possible. Tackling the problem early on and seeking to agree a rescheduling arrangement is the best approach. There is a consumer protection framework in place to help you, and that framework is being strengthened. I fear that my story involving the Old Trafford insurance that keeps its distance from the products it designs, the hapless Elland Road Financial Services that doesn't quite understand the products it sells, and the financially weak Fratton Park, whose guarantee disappears in times of stress, is not too far removed from what we see in the financial services industry from time to time. The story of our customer, Mrs. Giles, will be familiar to many of the thousands of customers who lodge complaints with the Financial Services Ombudsman. Standing still with our consumer protection agenda is therefore not an option, despite the pressing demands of prudential banking regulation. In the new central bank, we're determined to keep consumer protection a top priority. and to reinforce the framework governing the various ways financial firms interact with their customers by strengthening the Consumer Protection Code. We are also determined to drive forward changes to improve the way banks deal with their customers in mortgage arrears. Thank you for your hospitable welcome to Cork.